Hey there, my name is Russ Horn, and today I'd like to show you about using moving average crossovers to give you a signal, whether that is an entry signal or a signal to exit a trade. When it comes to using moving averages to give you signals, I want to keep the settings of the moving averages fairly low. I want to use fairly small numbers. Now, I don't want to go too small, and I'll show you why, but I don't want to go too big either, and I'll show you why that's the case as well. When we use moving averages that are too small, there's some pros, but there's also some cons. And when we use moving averages that are too big, well, generally we're just getting in too late. So let's take a look at the first setting that a lot of traders use, and that's a 2 and a 5. This is a combination of exponential moving averages. So we've got a 2 EMA and a 5 EMA, and I'll put those on the chart. So with the 2 and the 5, we can see that the moving averages are right in the price, and we do get an awful lot of moving back and forth. The 2 will go above and below the 5 quite regularly. Now I'm going to throw another indicator on here. It's going to paint an arrow whenever the moving averages cross, just so you can see this clearer. So with the arrows on the chart, you can just see how regularly these moving averages are crossing. Now, the pro to this, the upside to having a fast set of moving averages, is you're going to get signals in a very timely manner. You're going to get them as soon as the market turns up or turns down. Now, the cons that come with that is when the market isn't ready to really make a turn, you're still going to get a signal. So you're going to get signals very, very frequently. You're going to get a lot of false signals when the market is simply making an adjustment rather than changing direction. So with an indicator like the 2 and the 5, again, you're going to get timely signals, but they can also get you into a lot of bad trades. So the next setting that I want to use is a 3 and an 8. And with the 3 and the 8 settings, we can see that the crossovers happen less frequently, but you still get these crossovers in a fairly timely manner. The market doesn't have to move too much farther before you get a signal. Now, the entry signal to go short would be here. The entry signal to go long would be in here, and another one to go long in here, another one to go short in here. So you still get these entry signals in a fairly efficient manner without getting a whole lot of fake signal. Now with the 3 and the 8 setting, you're still going to get fake signals, and you can't ever completely get away from those. But with the 3 and the 8, you're going to get just a better quality trading signal. So let's go up a little bit more. We'll go with a 5 and a 13. So we can see with the 5 and the 13, we're still getting signals, but we are starting to get them on the delayed side now. The market is starting to have to move quite a ways before we get a signal to enter a trade. So if we're looking at a short in here, we'd be getting short at the close of this candle. If we're looking at a short in here, we'd be looking at getting a short on the close of not this candle, but the next candle. So we're starting to see the longer moving averages delaying the signals that we would want to take. And if you slow these moving averages down even further, you're going to find that you're going to get into trades later and later. When you're using longer moving averages for signals, you're going to start getting into trades, usually by the time you should look at getting out of trades. And this is going to be the same for getting out of a trade when you're using these moving average crossovers. When you have faster moving averages, like the 2 and the 5 that we saw earlier, they're going to be telling you to get out of trades before the market is really done moving. If you have a 3 and an 8, you're going to be told to get out of trades, usually at a pretty good time. But if you're using a 5 and a 13 like this, you're going to be getting out of trades after the market has pulled back maybe a little bit further than you'd like it to. So the longer these moving averages are, the later you're getting into trades, but the later you're getting out of trades. So the profit margin inside of that is going to get smaller and smaller the longer these moving average settings are. So we're going to go back to the 3 and the 8, my preferred moving averages, and we're going to take a look at when you would use these. Now with these moving averages, you don't want to take every single trade signal that comes along. You want to take on a little bit more responsibility than that. So when you do have smaller moving averages doing crossovers, again, you're going to get frequent signals in both directions. So let's switch this back to the 3 and the 8. So with settings like this, or any settings that you're using as signals, you want a reason to be looking to get into a trade. And there are several different reasons why you would look at one signal versus another one. In this area of the market is moving up. So we're looking for buy trades. So we would generally ignore the sell trades. We're looking to go with the trend. So we wouldn't want to be taking trades against the trend. Now, this isn't the only reason you would do this. You would be looking for an area like this, for example, where you have some resistance and you're seeing the market bounce off of that as support. And now you're looking for a signal to go long off of a bounce of support and resistance. And that could give you an entry like this. And you get into the trade, and the crossover to the other side could get you out of the trade. Let's take a look at another reason you would use a crossover. Let's draw a trend line this way. So now we've got a market moving away from the trend line, bouncing off the trend line, and we're looking for a trend line break. We want the market to close below the trend line. And for that, we're looking for that moving average crossover. And here we get a crossover down. That gives us the confirmation that we're looking for. We're looking for the market to close below the trend line. So this gives us that signal that we're looking for in order to take this trade. And in this area, we could be looking for a short trade because the trend is down. We would ignore the signal to go long, but take the signal to go short. And in here, we could be looking at a double bottom. So we'd be looking for that opportunity to go long. And we could be doing this with divergence type trades as well, where the market is making a high followed by a higher high. And let's throw a divergence indicator on the chart. And we can see the market making a high followed by a higher high, and we have a high followed by a lower high. So we have divergence on this section of the chart. So we get the crossover down to give us that short signal. So we're not going to take every single crossover that happens. We are looking for the crossovers as a signal to validate or confirm the trades that we have in mind. There's another nice little divergence trade in here. We've got a market making a lower low and the oscillator making a higher low, and we get the crossover to go long in this area here. Now, these are the 3 and the 8 EMAs. Again, these are my preferred moving averages when I use them for signals. The 2 and the 5 is a little too fast for me. The 5 and the 13, it's a little too slow for me, but you might like something inside of that range. Try some different things. I've used a 4 and a 5 pair before, and I like that very much as well. So try some different moving average combinations and find one that you like. Thank you for watching, and I'll see you in the next video.